What is good, guys? Welcome to another video. Recently, I did a poll on my Instagram where I asked what YouTube video my followers would want to see. The most typical answer I got was optimal trade entries and looking for the best entry possible in the market with minimal drawdown. So in this video, I'm going to be breaking down some skills that I use to give me a better entry on my trades. I do believe in having decently sized stop losses to allow the Forex pair to have moves. However, there are some ways that we can define an entry and possibly allow ourselves zero drawdown at all. I'm going to be going through them to my best capability. Hope you enjoy. The first example I'm going to go through is a double confluence with supply and demand and Fibonacci's. And I've gone through this before, so I'm going to go through it again. The first thing we're going to do is highlight the demand zone within the market. And we can see this is the demand zone that we're talking about because that is where the market actually was able to break above those highs. What I'm going to do now is grab a Fibonacci from this lowest point here to the highest point there. I'm not taking this wick into account because it's a purge. As you can see, it lines up quite nicely with our demand zone. You want to get a pinpoint entry where the market is going to tap into and likely bounce from quickly. It's going to be the top of the order block. But 9 times out of 10, traders will get wicked down and it will push down. However, if we add a Fibonacci, it can just give us that small extra confluence where the market wants to move from. And as you can see, the market did move from that 5 zone. If we just scale in very, very tightly, our entry in this zone was around, go from the actual Fibonacci, we're looking at a drawdown of around 2 points, two pips, okay? If the market moved into our zone, hit our limit order, we're looking at about 2 pip SL. In addition, you can also maybe add this smaller demand zone in for extra confluences, okay? So here is another example where it could have worked out. So all I'm going to do is take a trend line and drag it across there, and we can see we grab a liquidity there. Then the market moved down. As we're kind of moving up, we're grabbing this high. So if you draw a simple line from there to there, as you can see, this is a sort of resistance liquidity zone. What I'm going to simply do here is grab another Fibonacci from this high, this low down here, drag it out like so, and as you can see, it does match up quite nicely with our 0.5. If we were to place an entry at that 0.5 level there, we can see that we would only have a drawdown of 1.1 pips. So for me, that's minimal drawdown possible. The second strategy I'm going to talk about and is very frowned upon amongst traders is Elliot Waves. And I enjoy Elliot Waves. I do like to trade Elliot Waves. And I have a set of skills that enable me to benefit off Elliot Waves. It works for me, so it's cool. So funny, I'm editing this now, and I meant to say EMAs, not Elliot Waves, and it's funny how they sound the same. But yeah, I meant EMAs, not Elliot Waves, so just to stop any confusion. So I personally only use the 200 EMA on the 15-minute time frame, and this is where I'm going to be going through my examples. As you can see on this trade here, it's very similar again, where we have the market grab liquidity from there, and then we're pushing down. But we want to try find a short entry down here to target this liquidity down here, okay? All I'm going to do is put on my 200 EMA. I'm going to match up my 200 EMA with a order block or a supply zone. As you can see, it works quite nicely. I'm going to place a sell order at my 200 EMA here with my SL above the order block, then my target being down by this. We just watch this play out. It is very, very kind of impressive. As you can see, we touch our 200 EMA perfectly there. Of course, we're going to be trading it, so we may move, but we touched our EMA to the penny here. So you would have got a penny entry, and then that is where the market would have potentially moved down, and you would have been able to get your profits from trade here. Okay, don't get me wrong, EMAs do not work all the time, especially for a consolidated market. We want to see a trending market. We want to see the market trending downwards. That is where our EMAs come into power. As you can see here, they worked out quite nicely where we do have that wick above slightly, but they are touching here and here very, very nicely, ejecting from them. So I'm just going to be going through one more example with the EMA. And this is an example where the market had a push up, had a small move down. I'm looking for the market to come back down, pick up some liquidity, and then potentially move and grab this high up here, okay? So as you can see, the market is just trading sideways towards the downside, and I'm going to be looking at these highs around here for the market to come back down, pick up, and then rally from, okay? That's our neckline structure. So that lines up quite nicely with our EMA, correct? So what I'm going to do is place a buy limit order around the EMA zone there. I'm going to watch the market potentially sweep this high here, then my SL just slightly below, give or take 10, okay? See, we get that move down and we touch our EMA very nicely. We did have a slight drawdown there, around 3 pips, okay? I think that's very good, okay? And we did get a nice move from there where our price target Okay? I think this strategy is very, very good and can be very useful if you use it correctly. Last strategy that we're going to be going through is the liquidity grab strategy, where we look for an order entry of a sell or a buy, give or take 2 pips above the previous high. This is a very risky strategy, and for my scalpers, however, it can be quite effective if used properly. I am trademarking this because I've discovered this myself. I haven't seen it anywhere else. I just simply have seen this as I've been trading, and I've been quite a lot. So what I'm going to do is look at a previous high here and say my bias is looking downside below the 200 EMA and things like that. Do is I'm going to expect the market to swing this high and then do down. For the place of my entry at the level, I'm going to give or take 2 pips. So I'm going to go 2 pips down, round up to there, that properly, round there, place my price target there. I'm going to place my SL just above a specific zone, and then I'm going to place my price target back to the, okay? So market pushes up, grabs the liquidity. As you can see, 2 pips exactly, grab liquidity. Then we do have a push down. Of course, in hindsight, this is very, very simple, but it can be a very effective strategy if you time it with other things. So here is another example of where this quick strategy could have worked out. Again, this is not a solid bulletproof strategy, but it can be useful if you add other elements to it. So here you can see an example of where we had this high. The market grabbed liquidity from it. What we're going to do is measure 2 pips above that high, and this is in regards to shorts. So we're going to 2 pips above that previous high, looking for the market to move down and give us some profits. See, we do get a nice move down from there. If we just zoom into this trade ever so slightly, you can have a look at our entry. We had a slippage of 1.1 pips. So for me, that is an optimal entry. There is another example of where it possibly would have worked out. So we can see that we have this high presented by here, market grab liquidity and pushed up to break structure. You also have to swing lows, which we do. We measure 2 pips below this low by here. What I'm going to do is highlight 2 pips below the low, is around, place a horizontal line, and then I'm going to place my buy limit order at that zone and look at that nice move up. We had a small drawdown of 1.6 pips. For me, that is a decent. Okay, that's 3 examples of where it's worked out. It's a very difficult strategy to implement, but liquidity grabs can be a useful area for you to look for buy or sell orders. Hope this video helped. I'll let the past me do a outro for this video. That is the video complete. I hope you guys enjoyed. I hope you really took some educational value from this, and it will help you in your trading sessions. Backtest, redefine, see what you like, see what you don't like, and make this your own. Hope you guys enjoyed. I would really appreciate a like, a comment, a subscribe, all that type of stuff, and I'll post more content just like this.